Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, June 27, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, she continues to do the same thing day after day after day. Basically trading in a narrow range, still sliding sideways in a bearish wedgish formation. And let me reiterate this one more time, and it's very difficult to see because there's another side to this, but we had a slight drop down, and she's making a bearish, flaggish, wedgish kind of thing here. Now, if you want to say, well, that's looks like bullshit to me, we could say, hey, here's where it's bullshit. As long as she's above all the moving averages, specifically on the daily chart, weekly chart, and beyond, which she is, the trend is up, and none of that really matters in the big scheme of things. These are just shallow pullbacks in the midst of an uptrend. Now, here's what we've got on the board. They're trying to break the chain of this bearish wedgish pattern. They haven't really broken the chain yet. I talked about it this morning with the live room, wrote it down. One of the first things this morning in the early commentary. You'll see it later when I review the notes from inside the numbers. But there's a potential catalyst. Tomorrow at 8:30 a.m., we get the phony economic data release. And tomorrow's data release happens to be the what's called core CPE. That does not stand for customer premise equipment, but what it does stand for is personal consumption expenditures price index, excluding food and energy. Now, do we really care what's in there and what the number is? No, absolutely not. It's all made up. It's a formula. They have no idea what the number is, but the market hangs on the release, knowing that the Fed watches this number for increases and decreases. Why they pull out two of the most important metrics that we have, food and energy, which we consume the most of, is beyond me and everybody else for that matter. But nevertheless, it's a metric that the Fed watches. And if it's deemed negative, the market can get a rug pull incident. Or if it's deemed going in the right direction, according to the Fed, the market can pop, break the chain of the bearish, flaggish, wedgish situation, and go right back up toward the former highs. Tomorrow, Friday morning, can be a catalyst situation. Remember the title from last night's video. Big move coming shortly. We don't really know whether it's up or down. The trend is your friend, can certainly be a rug pull incident, but a bigger move is coming. That's what's coming. The market's telling us it's coming. She's indecisive, waiting on something going sideways day after day after day, coming into an on-time type of situation once again for a move to ensue. Not saying it's down, not saying it's up. A move is coming. Any other material change on the daily chart from yesterday to today? The answer is a curt no. We are coming into an end of the quarter at the end of this week. Will be the end of June, therefore the end of half a year and the end of a quarter. It's a natural breaking point. When one thing ends, a new thing begins. Does that sound familiar? From a timing perspective, a new thing, whether one wants to believe in it or not, is beginning. A new quarter, a new half a year, and a new month. That is what it is at face value. Write it down. Put it on a 3M sticky note. What happened today inside the numbers? First question of the day. Anybody make any money today inside the numbers? Were you short? Did you make money? Were you long? Did you make money? Did you take both trades? Did you make money? Help a brother out. I'm not the brother. All the other traders out there, the other viewers are the brothers. Help a brother out. People are looking for help. Is this a place that's helpful? Do you learn stuff? Do you make money? Very simple. If you can answer those two questions, yes, please post a comment under the video. Say whatever you like, the good, the bad, and the ugly. The forum is yours. You can pause the video, read the notes, go back to the chart and double check the work. What I will do is highlight a few important things. We'll start today with a bull pivot coming in at 546. Above opens the door for higher stuff, 547.15. That would be overhead resistance. And if above open the door for other stuff, this is the early morning schematic. We got to lay out everything we got, and then we narrow it down as we get closer to the open. And then certainly during the regular session, we're updating basically in real time. The flip side situation is support areas for a bounce back in the other direction. The nearby zone is 544.75 down to 543.95. Right of the vertical is today's activity. Here's a 5-minute chart, and as you can see, 544.75 was in fact bona fide support, not once, but twice. They never really went below that other than a few pennies. We did have long trades in the room at that price, but that wasn't the first trade of the day. That was the second SPY trade of the day. Just wait, there's more. Let's scroll up and see what happens as we get closer to the opening bell. 9 o'clock, the pivot is still the same. It's overhead resistance, yada, yada. Nothing really changed, but sometimes it does, so we reiterate things as we get closer to the opening bell. 544.75, if they drop them at the open, that's support for a bounce back. Above 546 is the bull case for more upside. It is the pivot. But look at this, 934, and there's your pivot, 546. They got there right away. Above opens the door. Now we're narrowing things down a little bit. 546.50 to 547.15. 547.15 is the next important numbers. They reach the resistance zone. If they get below or back below at this point in the morning, 10 minutes into the day, 546.50, it's the case to fall back more. To where? The pivot. Sound familiar? You hear that all the time. This is one of our small bucketful of morning trades. They all look the same to each other. There's like, let's say, 4 or 5 variety of different trades that I take this morning. This was one of them. We're trading to get back to the pivot in this case. What I said to traders in the live room was, you can short 546.50 up to 547.15. Anywhere in that zone, they shouldn't be able to waltz right on through, should have a pullback from that zone. So we had traders load the boat in that zone above 546.50. And what happened? Obviously, they were paid. They were paid right away. It was a double, it was a triple, it was a Whopper Jr., whatever you want to call it. It was, let's say, 12, 13 S&P handles, $1.20, $1.25, $1, whatever traders wanted to take off the table, they got it, as they say in the trading parlance, right away. What did I say to traders after that? Specifically, back above 546 on candle closes, you're not going to want to be short anymore. At this point down here, we already had everything or most everything off for most traders. Some traders may have had a trailer, and 546 was the bogey on the way back up. Just let it go if they get above 546. How you doing? It was what we call nice trade. Pause the video, read the notes, go back to the chart, and double check the work. There's your pullback and pivot as a target. Traders short have a profit and a risk-free, emotionless trade on the trailer. Now, 951, 944.75 is the next support from where I sit on the way down. It was that one in the box, and that was a nice trade on the way back up. Traders in the live room got what we call a double barrel trade in the SPY today. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. Everything you need to be successful trading the S&P, options on the S&P, SPY, futures, ES, MES, options on futures. You could trade anything you want, exchange traded products. It's a directional trade each and every day. We had 3 potential stocks on the move today: Micron, CVS, and International Paper. None of the 3 hit their entry objectives. They're off the board. There were no stocks on the move that hit today. Doesn't happen often, but it happens once in a while. What's going on over in Camp IWM today? Finished on the highs, up $2, about 1%. That's a positive close right into the convergence of the 100, the 20, and the 50 period moving average. Back above the moving averages, what happens? 203.75, give or take, would be on the table. If you get a good PCE number and they're popping the market on a Friday into the weekend, melt them up into the weekend, they could do that. That's where you're going to find the IWM tomorrow or higher. What about the folks down at the transportation department? My favorite canary in the coal mine, second favorite market leading indicator next to the folks in Camp IWM. This one down 0.5 point, 0.5%, 76 points. Not really giving us anything material to hang our hat on. As you can see, trying to recapture the moving averages on the daily chart as she was the last few days. Look where we are in the weekly chart. What's going to happen tomorrow? They're going to trade into and above the convergence of the 50 and the 20-week moving average tomorrow. We're watching closely. The PCE is going to be tomorrow's catalyst, in my opinion. Do we care about the numbers? Do we even think the market moves on those numbers? No, we don't. We think it's built in the cake. When I say we, I think me. But it doesn't matter. The market gets jolted around at 8:30, picks a direction it goes on numbers that the market finds meaningful on that day. We don't really care the reason. We don't care the numbers. We don't care the story. What we care are, where is the market? What's it doing on the chart? Where's the price action? Where is the money flow? That's all we need to know. Everything else we could figure out on our own. What's going on here over at the Q people? Up $1.24 today, 0.25%. Still in the midst of putting in the same as the S&P, the bearish wedgish pattern. But again, above all the moving averages, trend is who? She's your friend. Technically, there's nothing wrong with the Qs. You look at the weekly chart, what do you got here? You're extended from home base. You do have a little tail. You got to retrace this week, but really this is just an uptrend. Pullbacks in an uptrend are normal garden variety market behavior. The financials, the XLF down a nickel today. Nothing doing. A little bit of a dip below the 100 period moving average. Pop back up. Finished basically very similar to where they closed yesterday. So they have provided no new information from a chart perspective. At this point in the week, we'll revert to the weekly chart and say where they finished the week is going to count. Do they finish above or below the 20-week moving average? If they're below, are they above or below last week's low? If they're below, are they above or below $40.36? That's going to be bogey-ish. Smash Mouth, Philadelphia Semiconductor Index, the SMH, down about 0.8%, $2 today. Bearish, flaggish pattern, riding the 20-week moving average, daily moving average. Weekly chart, we have a top. We have a follow-through week. That's this week. Generally speaking, this market will want to test the last breakup candle low in the sequence. We talked about it last night. Call it 250, give or take, for argument's sake. 250.85 is the last breakout area on the daily chart. 250 is the weekly chart breakup candle low. 250 is a big fat round number. Therefore, 250 is in the cards if this plays out at minimum. The flip side situation is the 20-day moving average going to hold and they're just going to ricochet back up? And is the PCE, the core PCE, going to be the catalyst, or are they going to have some other catalyst? We'll see on Friday. Weekly close will be very, very important. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.